Joining me today is Jerry Sweeney, President and CEO of Brandywine Realty Trust. Jerry, thanks for joining us.
A pleasure to be here.
Great.
Thank you.
Can you tell us a little bit about some of the steps that Brandywine has taken to stabilize its balance sheet?
Well, over the past year, I think we used every tool we could possibly use. I think the market forced it to do that. But during the course of the year, I think as we look back on our accomplishments, we very much focused on a deleveraging strategy. So we did a number of different things. We sold a number of properties. We have a very large unencumbered asset base, so we were able to put about $400 million worth of mortgages on previously unencumbered properties to raise capital. We frankly bought back a lot of our debt at a discount, and that had a nice deleveraging impact. And then as the year progressed and we got through the first and second quarter, we wound up doing an equity transaction in the second quarter that raised about $250 million for the company. And then as the year progressed and the unsecured market came back, we were able to actually issue bonds towards the end of the year that showed that we had the ability to re-access the capital marketplace from a debt standpoint. As
we sit here in early 2010, are you satisfied where your balance sheet is? Is there still more work to be done?
No, Matt, I think we still have a little more work to do. I mean, we're an investment-grade company and have a large amount, as I mentioned, of our asset base unencumbered. We've been a serial issuer of bonds in the market. Our game plan, quite simply, over the next couple of years is to migrate to be a BBB credit versus the BBB minus where we are today. And I think so we're going to work on continuing to delever the company through sales, joint venture activities, possibly future equity issuances if the stock price is at a level where we think it's appropriate. Looking for some acquisitions that we would finance on an all-equity basis to delever the balance sheet.
And you mentioned acquisitions. Are you actively looking for acquisitions now, and how are you finding the market?
Well, that's a good question. I mean, I think we really dubbed the theme for Brandywine for 2010 as a year of leasing and missionary work. I mean, clearly with the real estate markets being challenging from a fundamental standpoint, we have a lot of leasing work to do, like every company. So that's the major focus in the organization. But in terms of looking at opportunities, we have a very good investment team in place. We made great strides during 2009 to create some financial capacity for the company. So I think we will be starting to look for investment opportunities during 2010. We have nothing built into our business plan, and that's why we dubbed it the year of missionary work. I think we'll be spending an awful lot of time looking at a number of different investment opportunities in our core market areas.
What is your outlook for the office space?
I think 2010 is going to be a continuation of the year of the shrinking pie. I mean, I think there's going to be lower levels of leasing activity, lower levels of absorption. Fortunately, the markets we're in, which are predominantly Philadelphia, Pennsylvania, New Jersey, Delaware, Maryland, and Virginia, which is about 90% of our asset base, those markets are fairly stable. But I also think you're going to see 2010 being the year of the separation of the have and have-not landlords. You know, and fortunately, Brandywine, like a lot of our public company peers, are in a very good position to invest capital in our properties.
For REIT.com, I'm Matt Bishar.